All right, so let's take a look at the markets. We'll take a look at crude, ES, and gold and see what moves were available today. So for crude, once again, the way you want to do this, and I'll explain, give me 1 second. All right, so what you're doing, or what I do, is you're coordinating 3 time frames. All right. So one time frame is for the direction, the other is for the signal or setup, whatever you want to call it, signal or setup, and the third is the entry time frame. So this, I mean, most people do this anyway. It's nothing, So for example, they'll use not really sure. Usually they use the 4 hour and the 15 minute, right? So you'll see that 4 hour and 15 minute, or someone will use the weekly, daily, and 30 minute or something like that. But anyway, most traders, at least the ones I know, that use the time frames, they're using this. It's 3 time frames. So I use 3 time frame. I think majority use. Anyone who does the top-down analysis, they use 3 time frames. The difference is that I'm not using time. I'm using box size, meaning the 3 tape reading charts. So it's similar to using 3 Renko charts or 3 range charts, but these are 3 point and figure with volume, aka tape reading charts. That's what Wyckoff called it. So, and it works just fine. It works very nice. All right, the idea here is the more important point here. You have to go look for direction and signal, but I use one more, for entry, very sharp entries. So you'll see, for example, 4 hour. Then a lot of folks will use 15 minute, and then they use either one or 2 min entry. Sometimes 3 minute, but whatever. 1, 2, or 3 minute entry. So this is what a lot of folks do. So given that, I'm just going to show opportunities presented themselves. The higher row is the higher time frame, or the higher brick size, or the higher box size, PNF box size, and below that is the setup, signal, whatever. So we're going to take a look at that, and it works very nice. Anyway, so let's take a look at crude and see the opportunity that was available in crude. Okay, now look, first thing is it's on buys. It's because it's making higher highs, it's on buys. So you look for longs only. Then what happened was you had a pullback, and look at where the pullback basically tested the break with 100,000 contracts. So the way it looked is it pulled back. First of all, this is distributive action right here. I know because of the high volume prints and then direction down, that is telling me that this is distributive. Because once you have that much volume up here and then have a break, it's distributive. That's all I have to say about that. And then it pulled back into accumulation. This is accumulation. How do I know? Big prints break out. Very likely this is accumulation, and big prints here break down is distribution. Okay, so they're setting up your support and resistance. The accumulation here is setting up the support, and distribution here is setting up your resistance. It's like the low of a rally and the high of a rally. So, I mean, it just came back and tested that accumulation area, and that's exactly where I'm expecting buying pressure to come in, and it did. It came in 7,000, another 7,000 to 14,000 across here and more, right? And then it broke right there, boom. Right there. So you have the buying accumulation, and then it lead to a breakout, And then where do you think it's going to go? It's going to support to the distribution, which is the resistance. So it just goes to support to resistance. It couldn't get through here. So, I mean, but the more important point is that when the market is pulling back, you need to know where your accumulation structure is, where that support is, and look for reaccumulation. This here is accumulation. That there is distribution. And again, it's really straightforward. Buying white bricks, 14,000 contracts right there, 5,000, 6,000, and then the break. Okay, then the distribution, another 14,000, break. Comes back down into that same area, gets reaccumulated right there, break, right? Reaccumulate, break. And you can tell, I mean, just look at the big green above the volume bricks. So, and where is it going to go? It's going to go into this resistance area to try to take it out. So they went there, but they couldn't take it out. But that's exactly where you expect it to go before sellers start pressing. How did this look on the 5-minute? That's 7 and 7. 7,000 and 7,000. You see this? It looked like this structure here. And then that big green break looks like that there. Now it's, that's why I use the bar chart as well. And you see very clearly that you have your accumulation up, down, up, down, up, down, and then break. Right? After that, it pulled back to test. And then this was a little disappointing in that it only gave one rally. And that rally just went into the prior area of resistance from which the sellers did not let it move and just took it down. So I thought it was going to hold. I thought, okay, because this is some reaccumulation here, right here. Right there. Right? So I thought that that when it tested this area, it was going to hold right here. Right? I thought it was going to hold right there because it's on top of this and all of that. So these guys were ready, but they didn't break. Instead, it just fell. And no cigar. All right, so that was crude. Now we'll go to the ES. Now, what does that mean? Does that mean that you're not going to trade any more crude? Of course not. I mean, look, it's still here, right? Let me see the count on this. 9. Yeah, no wonder it's basing out, like the cause and effect. You can see very clearly. So, anyway, moving to the ES. So the ES, this was ridiculous. All right, so I mean, you see that it's buys. It's on buys, which means longs only. Longs only. If you are trying to trade market two-sided, that's going to create a lot of frustration. You have to have, when someone says you have to be objective and blah, blah, blah. No. Keep the bias, because the bias helps you be on the right side of the trade. Probability is on your side, and the RR, the risk reward, is on your side. Because a higher time frame is rotating up. So, anyway. So we have buys, and this right here, you see this? Before it broke, it looked like that. Let me show this. Okay, now look at this. This accumulation structure. How do I know? Is because it went up and all of that, and this was the background, right? The reaccumulation. You see this? All the white prints. Now Now you see no white prints, and now when it's going into that area, ding, 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 ding. So they're reaccumulating this area. Now the the problem is they didn't break this area. They went to, if they broke, I think it would have had a shot to take it up to the highs and break through, but it didn't. Instead, it just couldn't, and it fell. All right, it fell, went up, fell some more, and then lo and behold, finally reaccumulated here and created another structure, and then you had buys and broke right through and went up. Okay, and then puke fest. So the original accumulation was here. That right there. Those are accumulation. You need volume, you need level, volume, base, breakout. Level, volume, base, breakout. Boom. So, yeah. But unfortunately it didn't break, so it's invalid because it didn't break out. It needs to break out of the resistance area. But it didn't. And it kept on going through down, but they kept reaccumulating. And then finally, they made another base over here, right? Then broke out. The reason why these are all ones and zeros is because it's near FOMC, so it moves very quickly, and they're not showing the big prints, but you can see how these big white prints stand out relative to the zeros and ones. So I mean, it just took it up here. Now so the problem here though was that this accumulation did not hold. This one here did not hold. This entire structure here against that background did not hold. So you don't know if it's going to work or this, that, whatever. So it went down and they continued their accumulation and then finally broke out. How it looked on the ES was right here. It's right here. I knew that thing was going to rip. You know why? Because of this wick. What did I do? What I did. That wick right there, it was a spring of all of these lows. So it sprung all those lows and tested and then smashed. Now here's the thing with the ES, it was looking so bullish that you just have to be careful about just trying to buy the pullback. There's one approach that you'll just buy the pullback at 50% or 68% or something like that. Just buy the pullback at a predetermined price without waiting for a reversal back into the direction of trend. That type of strategy did not work because they took out the lows of the rally. And when they took out the lows, guess what? Reaccumulated right here for the test back into the high. So ES has a tendency to do that, folks. Do not, especially on an intraday, if you have the mindset of higher high, higher low, you cannot trade this market. This market doesn't care about higher high, higher low. It will target those lows and then it will target the highs and reverse. So other market, I think the thinner markets, they have more of a trend-like structure, but the ES has more of a spring and upthrust type of behavior. You have to know. I mean, take a look what happened. The move today came from this spring. Tap, tap, boom. The next move came from this spring. You think that's a coincidence that this wick resulted in that move and this wick cracked the lows, held, and resulted in a move all the way to the high? So this is what happens. So that higher high, higher low model is going to work on higher time frames, but definitely not for intraday because it just doesn't work intraday. All right. So now Where is the accumulation here? Where the hell did I find it? Yeah, this one, the one that didn't work, and then went lower, did a spring, tap, tap. And this one right here. It's a little bigger than that. It's all this. And then led to that. Now the thing is, when you have accumulation, you have breakout, you're looking for buy pullbacks, but you have to be careful and not just say, oh, okay, let me just put it on Isa Creek or whatever the hell, like on top of this area. You just put the order, you got ripped, and then it went. So you have to wait and see how it behaves there. I believe that after this green bar, everybody wanted to get in. So they had their orders right over here for the pullback to test, because this green bar looks extremely bullish, and this is what is known, I call it a FOMO bar, which means that the breakout traders are just going to go long, and the more reserved traders are going to put their order on top of some high, for a pullback. But both of them got ripped, and because their stops would be below this wick right here, the extreme low. That's what the stop is. So that's what got targeted. Pap, below here, and then it went up. So I mean, so the bad day on the ES for any trend, trend type of stuff. For example, if you're short here, they got taken here. If you went long here, you got taken here. This is yeah, I don't know. This is very algorithmic. Anyway, so that was the move in the ES. When the buys came in, it was. I'm actually looking for more volume and this and that, but all the zeros and ones, it's all because of FOMC. The market's moving too fast. So what are you gonna do? I was very, very inclined to buy it over here. Very inclined, because I knew they ripped the traders already, right? And I saw this base over here. See this base? But I can't read this shit because it was moving too fast and it's not building volume. So I just can't read it. Shit, can't read it. 0, 0. What am I supposed to do with that? Anyway, so that was the situation. And should have thought about this, because this was a really, when you see this behavior, goes down and then breaks out, especially if the move down is on volume, it's a very, very, very high probability trade. Right? Because if it's effort on the way down and then a reversal breakout, those things work. I mean, if you want something that is really good, that's it. And it's much better than all those other shit out there. Anyway, so that's what happened here, and it went up. So I mean, gonna get it tomorrow. All right, let's take a look at gold. Did I do gold? No, I didn't do gold. Okay, so gold. It was a shitty base. I don't know why they didn't have a better base, but this base really is garbage. Okay, this was the initial base. You see this base? We have 4, 4, 3, 8, 4. Then it breaks out. So base, breakout, high volume prints. What do you know? It's accumulation or reaccumulation. It's that, ding ding. That's what's going on. It's not rocket science. Buy, buy, buy. Why? Because they're buying a certain price range. They're buying within a certain price range. And then take it out. Come back, pull back, test of accumulation, and then rebased. So this is their reaccumulation right here. and then it broke here. But I just I don't know how I messed this one up. I didn't get in. I don't know what I was thinking. But well, what are you gonna do? 1, 2, 3, 4, 5. Shit, and it has good volume too. Yeah, I don't know what happened here. So anyway, that happened. It pulled back, and from the pullback, it rallied up. How did this look? You can see what happened. Bang, right? So there's the accumulation happening here in the double bottom. Accumulate, 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 boom, breakout, pull back to test, all of that crap, and then it had a little move. So I mean, these markets aren't, I mean, that's not a little move, but it's not, it could have been bigger. So anyway, so that's 1, 2, 3, 4, 5. I don't know. It should have. Maybe I was close. I don't know. Probably went to lunch. Anyway, so that's the situation in gold, and that was the move today in gold, right? So remember, it's, when you find reaccumulation areas, accumulation areas, they pull back. First, they have to have accumulation. Strong accumulation has to break out, rally, pull back, test that accumulation area, reaccumulate, break out, get in on the pullback, and ride the next rally. Done. That's what you do. But everything has to align. I mean, it sounds simple, but everything needs to align. Meaning your higher time frame need to align and all that. You just don't just say, oh, okay, it's a box and a break and I want to get in. You have to understand. For example, you see this break? If on the left-hand side here, there were heavy volume prints, it would mean this was distributive action, right? So if the distribution was here with a heavy volume prints at the extreme high, it would test, and those sellers would come in and attempt to break the lows. So if the trend wasn't up, then if the trend was down, they would test against those high volume prints, which is basically distribution, and they would break the lows. So just have to kind of know that. All right, if you want to know more about this, I'm not, I just try to help the community, but you can go take a look at Wyckoff Division 2 course, and at the end of the Division 2 is where the studies are. So those studies, for some reason, he doesn't explain them in depth. So you have to go through it with a fine-tooth comb to really understand. And once you understand it, you have it's just practice and trade, and that's it. All right, take care, guys. Bye.